When a stock is in a strong downtrend, it can be challenging to find opportunities to buy. However, there is a bullish candlestick pattern that traders can look out for when prices are reaching their nearest support zone called the morning star pattern. The morning star pattern consists of three candles. The first candle is a long bearish candle that represents the current downtrend. The second candle is a small-bodied candle, which indicates indecision in the market. The third candle is a long bullish candle, which signifies a potential reversal in the trend. The Gravestone doji is a candlestick pattern that is formed when the opening and closing prices are at the low of the day, with a long upper shadow and no lower shadow. It gets its name from its shape, which resembles a gravestone. The pattern indicates that the market opened near its high and then sold off during the day, closing near its low. It is considered a bearish pattern and can be a sign that the price may reverse and start to trend downwards. When trading the Gravestone doji, traders may consider taking a short position below the low of the Gravestone doji, with a stop loss above the high of the pattern. Don't forget to subscribe my channel. The Marubozu candlestick pattern is a popular candlestick formation used in technical analysis. It occurs when the opening price of an asset is the same as its low price and the closing price is the same as its high price, resulting in a candle with no upper or lower shadow. This pattern indicates a strong trend in the market, as the absence of shadows implies that the price movement was unidirectional throughout the trading period. A bullish Marubozu occurs when the closing price is significantly higher than the opening price, while a bearish Marubozu occurs when the closing price is significantly lower than the opening price. Confirmation of the Marubozu pattern is crucial before taking a trade. Traders typically look for a second candle to confirm the pattern, which should show further price movement in the direction of the Marubozu candle. The entry point for the trade should be taken at the start of the next candle following the confirmation candle. The inverted hammer is a bullish reversal pattern that occurs at the end of a downtrend. It has a small real body near the bottom of the candlestick, with a long upper wick. This pattern indicates that the bears were initially in control, but the bull stepped in to push the price up to close near the high of the day, signaling a potential reversal in market sentiment. The hanging man, on the other hand, is a bearish reversal pattern that occurs at the end of an uptrend. It has a small real body near the top of the candlestick, with a long lower shadow. This pattern indicates that the bulls were initially in control, but the bears stepped in to push the price down to close near the low of the day, signaling a potential reversal in market sentiment. To enter trade, wait for confirmation candle.